Welcome everyone to Rethinking Agribusiness Investments Through the Pandemic, a series of 4 interesting platforms staged online for us by CASA, the Commercial Agriculture for Smallholders and Agribusiness program funded by UK Aid. CASA seeks to change how investors, donors and governments view and invest in agribusiness that work with smallholder supply chains. You can find out more at casaprogram.com. This is the last of 4 platforms, and today we will consider potential scenarios and investment opportunities after the pandemic is contained. Although it feels that recovery may be a long way off at present, it is important to look beyond the current crisis to identify investments that could accelerate the recovery. This is particularly important for smallholders and agribusinesses in developing countries where there is limited public sector support. Before we get started, please allow me to mention some points about organization. Please leave your videos off and remain muted. A recording will be shared afterwards. And for those that want even more, please follow the link in your invite or on the Hoover app to the excellent dossier of stimulating documents for this platform and for the previous platforms if you've not read them yet. Today's platform will last about an hour. We have 4 speakers and I will introduce them in a moment as they come to speak. And I will select 1 or 2 of your questions to ask them. So please put your questions in the Hoover app, as that's the best way to get a response from participants and to stimulate discussions afterwards. Or you can send your questions to our Zoom question master by double-clicking on him. So we welcome your questions, thank you. And now let's welcome our first speaker. Dr. Maximo Torero Cullen is the Chief Economist and Assistant Director General, Economic and Social Development Department of the UN Food and Agriculture Organization. Previously, he was a World Bank Group Executive Director. Dr. Torero also led the Markets, Trade and Institutions Division at the International Food Policy Research Institute. Maximo, you are most welcome. Please begin.
Oh, thank you very much. It's a pleasure to be here. So let me start dividing the periods of what we are facing today with the COVID-19 in 3 groups. First, the containment group, which we are basically over, in which we basically try to avoid the health problem to increase. But it had some consequences in terms of the food value chain because of the logistical part. And the major problem was the presence of some trade restrictions, which today are being smoothed out and reduced, especially in the staple world, although still in the high value world, fruits, vegetables, fish, there are still a lot of logistical problems that need to be resolved. But now we are moving to the consequences phase. This is a consequence of the policies put to resolve the health issue, which was mainly a lockdown process, which has created a situation of a deep recession. Initially, the IMF estimated that the recession will be around 3% at the global level, a reduction of 3% in GDP growth at the global level, but today, last estimates of the World Bank is saying that it's around 5%, and it could be even higher. What this means is that there will be a significant demand shock. In the previous stage of the containment, the shock was a supply shock, which created logistical distortions in the supply side. Now we are combining those remaining logistical supply shocks with this problem of recession. Now, the question is, what is the scenario? Is it a scenario of an immediate recovery? Is it a scenario of a U-shaped or an L-shaped recovery? We believe that the V-shaped recovery is over. That is not going to happen. We are moving into a U-shaped recovery. And how much long will be the base of the U is that what really matters and what makes the situation very complex. The length of the U-shape could create a significant recession across, especially developing and poor countries, which could put at risk many things in terms of food security, in terms of food access. So what we are saying and what we think is happening today is not a problem of food availability. We have enough food today available despite the logistical problems, even in the high value commodities. But we will have, and we have already, a significant problem of food access. That means resources to be able to buy that food, to be able to have the food you need to be able to keep food secure. Now, where are the bigger problems and where we need to think carefully on how to support them? First is in the small island development states. Why? Because they are choked because tourism is not working and won't be working until a vaccine is found. So we're talking 12 to 24 months. They depend on remittances. Remittances has been reduced substantially, minus 20% or more. They are vulnerable to climatic shocks and they are net food importers. Then we have Africa, which is still the penetration of the COVID-19 is not as high as it was expected, but it could be increasing in the following months. And why it's so complex in this region is because this region is already facing a problem, which is the problem of the locust, especially in Eastern Africa, which is threatening most of the harvest in several countries like Ethiopia and others in East Africa, Uganda and Kenya, and Yemen, especially a country already in a deep food crisis. But also many of these countries are oil food exporters. And the lower price of oil has affected them substantially. And here I'm referring to Nigeria, to Chad, to Libya and Algeria. Also, some of them like Mali, another food crisis country, is an exporter of cotton. And the imports of cotton has substantially reduced, basically close to zero. And this will be affecting substantially their capacity and their liquidity to be able to react to this situation. So, and then of course you have all the other countries which depend on minerals, which the commodity prices are going down because of the recession. So this shock will affect them and won't be able to have the liquidity they need. The G20 has helped a little bit by giving this period of grace of the payments of the debt for 2020, but that won't be enough for sure. So what we can do in the food value chain, how we can recover the food value chain in these sectors, or how we can help them. First, we need to create an additional demand that is already not there today, because the demand of the countries where they used to export their food commodities, for example, Netherlands, the UK, the US, will be reduced. How we create this new demand? Interregional trade is an option. Africa has already made an agreement for interregional trade, but is not yet implemented. What we are trying to work with the ministers is trying to accelerate that process, especially focusing on the non-trade barriers, and especially focusing on creating a Pan-African food safety agency that will allow to reduce all the barriers related to food safety issues, which we believe are one of the major problems behind, in addition, of course, to infrastructure. Second, we think that we need to give them intelligence on if they can still harvest or if they can still plant. Why is this so important? Harvest is important because still the lockdowns are not so deep, and if they can harvest, we need to secure their harvest. And planting because that will secure the next season food security. And that's something that we need to give importance right now. Now, if we are able to secure their harvest, what to do with the harvest? And that's the problem. So the second thing we are trying to do to help them to cope is storage, because the only way they can cope is to store what they have harvested so that they can sell it whenever the market improves. Remember, we're talking of a 12-month or more of a recession period over which they have to play until and increase their resilience. So we are working on identifying strategic locations of cooling and drying facilities that will allow them to do that, but also taking the opportunity of creating facilities with the multilateral agencies so that these can allow them to link them to financial markets. And we are looking to a more modern way of doing warehouse receipt systems to avoid the problems that we have found in other countries like Uganda on the warehouse systems. Basically using e-vouchers and linking them to the financial markets in strategic locations. This will be an investment that could pay off. So what we are trying to do in general is trying to find opportunities to change things like the interregional trade that could create a big difference to allow them to improve. But again, everything that we need to provide to them is mechanisms to increase their capacity to handle of this low shape. And let me just finalize with the last issue that we are concerned, and that's the first phase, moving to health, food, and development. And what is the major concern there? The major concern is that the next lockdown, if we are not careful in the health side, will not be a government lockdown, won't be a law lockdown. It will be an obligated lockdown because of health issues in the plants and so on, like what is happening in the US with the meat industry and in other countries with other industries. And that's what worries us. So our position there is you have to keep the health protocols alive, but you need to take opportunities to create development and to assure that the food value chain continues to be alive. Not because it is locked down by a decree, but because it could be locked down because of health. And this is very relevant based on what we are observing in the wholesale markets and retail markets in many Latin American countries right now, which the major wholesale markets are being closed because of the number of infected cases in those countries. Okay, so thank you very much. And those were the first ideas I want to share.
Thank you very much, Maximo. That was excellent. Thank you. We have a question from the audience, and that is, how do we ensure that smallholders in particular, the hidden middle, benefit from a shift towards this type of regional trade you've talked about? Thank you.
Yeah, exactly. So the idea is how we can create the standards. And that's why we are focusing on these Pan-African food safety agencies, because that's what will help to create the standards that will allow smallholders to link to dynamic markets. Normally, the problem they face is that they don't have the incentive in the market to improve their standards. They can do all the efforts, for example, for their maize to be aflatoxin-free, but the market is not paying the premium for that aflatoxin-free. So why do it? Why link to the markets? So the Food Safety Agency and following on Codex Alimentarius, we think will create this additional demand. And of course, the storage facility is another way to help them, because these warehouse receipt systems are designed for smallholders, so that they can bring the small produce that they want to sell and store it in a facility that will check for the standards, will check for the presence of aflatoxins, will dry it properly, and then they will give them a voucher, a EV voucher that will link them to the financial system. So we believe if we take this opportunity, we help them to create the scale they need to be able to link to this dynamic market, and especially to link with these options in the interregional trade.
Thank you. You've mentioned warehouse receipt financing, and you said how you want to do it in a different way. Could you, and you started to expand on that, could you expand a little bit more perhaps from the point of view of investors, and how this may be an opportunity for them and what they need to consider if they're to take advantage of that opportunity?
Yeah, we are having several private sector roundtables, and we are interacting with private sector. And what we are observing is that for them, this is an important element, because basically the way we are thinking this is instead of using the money from the multilateral organizations, which normally, like in the food price crisis, it went for subsidies, which the money will be diluted very quickly, to use that money to do investment that will create this backbone infrastructure. And that's like a PPP, because that creates incentive for the private sector to play a role. And they are extremely interested in working on this. And then, of course, we have very good information on how strategically locate those places. Why? Because we have geographical information on what is being farmed, what is being harvested, what amount, what are the type of soils, what is accessibility to markets, where is the location of the ports, everything that could help us to give some intelligence on where strategically these corridors, we call them the green corridors, could be start to set up. And this is just a seed. It doesn't mean that everything has to follow that exact design, but at least give an idea of something that could work. And also, the support from the multilaterals through the guarantee system could help enormously to attract the financial sector to reduce the risk of creating these e-vouchers linked to the private sector, to the farmers. So I think if we use properly these resources, and we have tested this before in other countries, if we give a buffer of protection that the banks can allow them to reduce the risk, they will be willing to start. And what we know is that the repayment of the farmers is pretty good. But the problem of the banks is that they don't have information to score the risk. So they need something to be able to reduce that risk. And that's where these mechanisms of little trust funds could help to do that. So we believe it could help to improve bancarization, it could help to improve link to financial markets, but especially help them to create a scale and have the capacity to store so that they can cope at least from this lower part of the U-shape for 12 or more months.
Well, thank you very much. That's very encouraging. Lots of opportunities for people. Now we will turn to our next speaker. Dr. Gillian Marcel is currently the managing member of Resilience Capital Ventures, LLC, an advisory firm in the blended finance space where she has been successful in capital raising, deal origination, and the design of partnerships bringing together organizations across the capital continuum. Gillian, you're most welcome to the panel, and we're looking forward to your contribution. Thank you.
Thank you, Julian, and thank you to everyone who is on the panel and also participating in this conversation. In my part of the world, usually when you start a presentation, you say all protocols observed, so that you make sure that you've acknowledged the folks who've gone before and any dignitaries who are in your presence. In terms of what I'm going to say, I feel as though I should say all apologies observed as well, because I am accepting this invitation with great kindness, and I've recognized that there are representatives of DFIs and a very successful impact investor who will come after my remarks. But in fact, my remarks are centered around some of the things that I've observed, and this is over the last 30 years, and particularly in the last 5, when I've been engaging with the impact investing world, about the things that need to change as far as design. So my remarks are going to be constructive, but they're definitely going to be framed in terms of things that I believe we need to improve. And so before I get into the specific recommendations, I also want to make 3 comments about the formational or foundational assumptions and premises that I'm going to use in my analysis. First of all, I'm going to suggest that an innovation approach is necessary, and because I only have 10 minutes, I will not be able to go into what I mean by an innovation approach, but I am an innovation scholar and have critiqued my own discipline to come up with a definition of innovation as process, in which the role of knowledge is particularly important, the process of search is very important, and diversity is also important. So I'll come back to those things. So an innovation approach, taking those as 3 sub-themes. The second is that I would argue that the future of investing in smallholder agriculture after the pandemic and investing in any of the development sectors after the pandemic, and even before we had a public health crisis, really requires that we view impact investing and have it function as a separate asset class that really lives up to its own mandate, which is to optimize risk-adjusted financial returns as well as societal impact. Because if we were really doing that, we would not be struggling to finance the Sustainable Development Goals, and we would not have had as much of a bounce or a slump rather in investing that is on the minds of so many folks. And then finally, I want to also argue that much of what I see being dysfunctional in the finance and investment world and in the development world per se could actually be solved if we were to take a feminist participatory development both at the theoretical level and in terms of our praxis. And why do I say that? I will illustrate when I get into the meat of the matter. And I also want to say that it's, of course, important to do that in a way that is intersectional and recognizes that there are differences that actually matter. So let me get into it. After those particular propositions, what I want to suggest is that in investing in smallholder agriculture and investing in commercial agriculture in Africa or in other regions, and I was very happy to hear Maximo speak about the specifics of small island states. It is vital that capital providers understand the importance of proximity and depth of knowledge. And I will come back to why that has been seemingly very difficult for capital providers to do, despite the fact that they say that they are interested in societal impact. And I'll illustrate this by describing one of the projects that I want to showcase in my remarks as well. So proximity to source is important, but proximity to source, recognizing power relations is also vital. Because a design strategy that recognizes proximity to source, where all of the power resides in London or in New York, but you have middle managers in the beneficiary countries or that are part of your pipeline, does not represent proximity to source. Because if I go back to the innovation lens, subject area knowledge is perhaps the most important capital. Knowledge capital is perhaps the most important part of any investment process. And so when time and time again we see investment interventions deployed in the global south, where because of the power relations that are at play, the depth of knowledge, subject area knowledge, resides away from the intended beneficiaries. So that's the first point that I would offer as a design challenge for investors, and particularly impact investors. If you believe in societal impact, then you have to be serious about the processes that you put in place to derive the depth of knowledge at source. Then the second point that I'd like to make in terms of a recommendation, and this comes out of, and it's particularly closest of all the things that I will say, to the times that we find ourselves in, where we have a public health challenge. I've been working with a colleague who is an epidemiologist, Dr. Tallulah Oni, and she has a construct called Systems for Health. And in the little thought piece that I will share after this panel, you will have the reference to that piece, as well as some of her deeper thinking on this issue. And in summary, what Dr. Oni and her colleagues argue is that in thinking about health, we really should be investing in systems that bring about positive health outcomes, as well as systems that are adjacent to health. And by that I mean food, waste and water, transportation, habitation, and so on. And so if you were to take that as a recommendation that could be extended into agriculture, which is what we're speaking about today, if we are investing in agriculture and if we're investing in agricultural outcomes, perhaps we also need to be thinking about investing in systems for agriculture and then thinking through what those systems are. And I think I heard from the FAO and from Maximo a lot of interesting thoughts around the ways in which the agriculture system and the practices of the agricultural producers is in fact embedded in a wider system. So why is that not happening? Because that's, my contention is that those two things, source, proximity, system, and I'll offer some suggestions and some explanations from my point of view. I think it's not happening actually because impact investors in particular, and DFIs to some extent, are mimicking mainstream finance. That is problematic, not only because the finance industry, perhaps only after the tech industry, is a site of some of the most chronic problems of sexism, racism, and coloniality. So what happens when you mimic Big Brother, when your aim is to speak about the assets under management and the size of your pipeline and so on, is that you move away from your purpose, which supposedly is risk-adjusted financial returns and societal impact. But the societal impact, as we all know, any development scholars, development practitioners, is the difficult stuff. That's the stuff that gets difficult to measure. That's the stuff that is difficult to quantify. And so if you are mimicking a set of practices and cultures and behaviors that privileges quantitative knowledge, metrics, ratings, and so on, not very smart metrics, by the way, you then fall into the trap of moving away from purpose, the purpose that would actually move the world forward, into a sort of mimicry of quantitative metrics. And so that's where the feminism comes in. Because if we were adopting a feminist analysis and praxis, it's pretty easy to spot that despite the fact that finance says finance is a relational game, the relations that they're speaking about are the relations that are maybe within 3 miles of Wall Street or 3 miles of the city. And so there is this belief that the only people who matter are in those social and cultural networks, which means, again, you're away from your proximity. So all of the design features within mainstream finance would cause impact investing to move away from its purpose. So because I'm not sure who's in the audience, but I imagine that there are some A-type financiers and investors. What I want to do is to
just concisely, please.
Yes, illustrate this very concretely with two examples. One is a company called Hello Tractor. So think Uber for tractors. And if that's not investment that should be having impact investors, DFIs, and maybe even some non-DFIs salivating, I don't know what is, because it gets to the heart of the need to actually invest in strategic assets, which individual farmers and individual agribusinesses would not be able to invest in on their own. And the second is GSF, which is based in South Africa, which illustrates the issue of subject area knowledge by having a bench of scientists, agronomists, university-based practitioners and specialists as part of its venture. And so although they are deeply rooted in something called unbounded organizational theory, which seeks to motivate and activate rural farmers, they've done so with a design that recognizes that deep technological knowledge and subject area knowledge is essential for actually meeting the purpose. So let me end there.
Thank you, Gillian.
Illustrations. And I would just close off by a quote from Howard Richards, who is a philosopher, who says, "Human beings are quite capable of circumventing even the most fundamental laws of capital accumulation. Capital's performance can be evaluated using social and ecological criteria. History does not have to be a process without a subject. We subjects are still here." Thank you very much. And Julian, apologies for going over a bit.
It was great listening to you. Thank you. Very inspiring. Now we turn to our next speaker. Steve Knocker is Root Capital's Chief Lending Officer, following a 25-year career in global banking at Bank of America, where he was Managing Director from 2011 to 2018. His primary responsibilities at Root Capital include oversight of lending strategy, product development, and direct supervision of some regional teams. Welcome to the panel, Steve. Please begin.
Thank you, Julian. Good afternoon, everybody, and or if you're like me here in the US, an early good morning to you. Just 30 seconds, if you'll indulge me on Root Capital.
Steve, if you don't mind, could you please turn your video on, because we cannot see you.
Sorry.
It is great hearing your voice, but it will be better.
Okay. There we go. There we go.
Thank you very much.
Sorry about the technological glitch. Just again, good afternoon, good morning. Just a quick background on Root Capital, since many may not be familiar with who we are, what we do, because my comments really are based upon what I see in day to day in what we do around the world. But Root Capital is an NGO based here in Boston. And really the focus is integrating finance and technical assistance to agri-SMEs around the world, in Africa, in Latin America, in Southeast Asia. The purpose really is to improve the businesses, ultimately driving impact, improving the livelihoods of the smallholder farmers. A lot of what we do revolves around export cash crops like coffee, cocoa, tree nuts, in particular macadamia. As mentioned, we're throughout the Americas, Sub-Saharan Africa, and in Indonesia as well. We also do a fair amount in local food crops, particularly in Sub-Saharan Africa. Think of sorghum, maize, rice, cassava. As we entered the crisis, we, like many others, were, sort of rallied to the cause, and built a little construct that I know other NGOs are using as well around, sort of thinking about the phases of the crisis and what we need to do, both protect phase one, phase two is recover, phase three, the rebuild, and as we like to talk about it at Root, is to reimagine. Since it's not going to be the old normal, it's cliche, but there will be, trying to figure out what that new normal is, where we will end up. The last part of the construct. The rebuild and reimagine is really the focus of today's session, and that's where I'll focus my remarks. Where are we today? Most of the developing world and great wide swaths of the developed world are, seeing martial law, restrictions on mobility and work. We're seeing some of this ease up now. Places like Rwanda, it's beginning to get a little bit better. We haven't seen too much easing as yet in Latin America, but it's beginning to happen. Notwithstanding that, we're still seeing rising infection rates. I'm sure many are like me and look at the paper every morning and see what's happening in the countries we care the most about. And the countries that I track, we're still seeing increases of 50 to 100% week over week. Total disruptions to national economies, global trade, international borders shut down in many places. Just look for a second down in South America, where we see Peru and Ecuador. For great valid reasons, the migrant workers in Ecuador are not being permitted to cross over to help with the coffee harvest in Peru. Food insecurity on the rise. There was a recent report by Agra documenting this. I think I saw it just yesterday. Climate change. We're still living with the locust issue in East Africa. We've had wicked weather patterns throughout Latin America and in Africa, with heavier than expected rain that's not supposed to be happening in the dry season, et cetera, et cetera. But if you look a little closer, what do we see? We see coffee ripening, being harvested across the Andes in Peru and Colombia. We have wonderful Arabica coffee being picked as we speak in the hills in Rwanda and in the west of Uganda. The farmers in Aceh in Indonesia just completed a remarkably successful harvest with coffee fetching prices that we haven't seen in many, many years. Another example, macadamia harvest, which just happened in Kenya, was a little bit late this year, had nothing to do with the crisis, everything to do with the heavy rains. It was a bumper crop. The buying is a little slower than expected because of the disruptions primarily in Europe among the buyers up there, but prices are expected to firm up, and our clients and the farmers are expecting to do just fine. Some of the local food crops, sorghum, maize, rice, multiple harvests throughout the year. We are seeing the harvests happening. We are seeing some disruptions with some of the buyers. Just a quick example, all of the various grains I just mentioned are used to brew beer. Bars are closed in Kenya, in Uganda, and so the breweries are selling a whole lot less, and therefore they are demanding less. We think it's a temporary hit. We fully expect that the taps quite literally will be turned on again, and our clients, the agri SMEs, are patiently waiting for that day to come, whether it's this month or next month. It's painful. We're working along with others to help our clients and to intervene and provide funding to tide them over. But again, we believe it will be short term. When we sort of boil it all down, in every single country where we are active around the world, virtually every continent, agriculture has been deemed essential by governments. There's been, it varies, but certainly there's political and logistical support, all of which ultimately has moderated, and we think will, at the end of the day, result in much less damage to the economies in the developing worlds that are reliant upon agriculture. If you look at other sectors, real estate, retail, travel, entertainment, there's not much to feel good about near term or longer term, but agriculture has been supported, and we think it will continue to be supported. Demand is held up. across the board for staple food crops. Again, we've seen disruptions to logistics. You can look at the border closures. You can look at the long line of trucks trying to cross from Uganda into Kenya and vice versa. There have been impacts to the distribution channels, some of which are short-term, some of which will be longer-term. If you look at how coffee is being purchased, whether you're in Europe or you're in the US or in Asia, we're brewing it ourselves at home now. We're not going to the corner roaster because they're closed. For those of us who used to get really good coffee at work, that's not happening anymore. So the Walmarts, Costco's, Waitroses of the world are where people are buying coffee. And what's pretty remarkable is that if you look at some of these, there has been zero decline in demand. It's just the manner in which the distribution channels have shifted, and some of that disruption, some of those changes will take some time to adjust. Again, I can go through all the different value chains, and it's a similar story. Some will be down, some will be up. But looking to the future, how do we envision what is in front of us? We were told to look, is it a V-shaped, a U-shaped, an L-shaped recovery? I don't think any of them, based upon the markets that we're focused on at Root Capital, none of these really pertain. Across all of these markets, the farmers, the men, the women, are busy planting, harvesting, and if you're in Central America, you've had your harvest, now you're preparing and planning for the season in front of them, excuse me. The agri-SMEs, processors, aggregators, are all hard at work. They're adapting their factories, their processing plants to the new health and safety requirements. Again, you can look at examples in macadamia, in Kenya, where the plants would have a dozen tables in the room where, again, it's primarily women are standing around the table, sorting and cracking the nuts. They now have to, they're now shifting to multiple shifts throughout the course of the day, because women and the men in the plants need to be separated by minimum 6 feet. So there are changes, but they're adapting to them. The logistical problems are being ironed out. Some are harder than others, but it's all moving. A real focus.
Steve, if you could start to wrap up now, please.
Okay, if you give me 60 seconds. The financing and the rest of the world, we're all sort of learning how to work remotely. So all the businesses are learning how to do this. Just a few thoughts to leave you with in terms of where we're focused, where we think we're going. Technology, it's cliche. Well, technology is changing everything. Well, it really is, from both an infrastructure and a content across the agricultural space in the developing markets. Wherever you go, there are smartphones, a ton of payments. The whiz-bang toys like blockchain. We see this now, whereas we didn't used to. We think that the crisis is will accelerate all of this. The markets will continue. We read about the death of globalization. You know what? In Kenya, they're still importing 80% of their wheat. In the US, we're importing 100% of our coffee. So there are still global markets, and they are functioning. Really, the last point about this is resilience. The smallholder farmers, they have everything thrown at them every year, whether it's climate change, disease, civil strife. Sometimes you get knocked down and it's hard to get up, but what we're seeing is that the sector, and there will be exceptions, but the sector continues to get stronger due to the challenges that they continue to face. Things can go wrong. The picture I'm painting is quite optimistic. What do we worry about? Access to capital. We worry about government action or inaction. We worry that certain issues like gender, youth, inclusion are de-emphasized at the moment. We hope it and expect it to be temporary. Sorry if I ran over, but we'll end it there.
Thank you very much, Steve. Thank you. And we'll take the questions at the end. I encourage all the participants, please make your questions known by double-clicking on the question master in Zoom or through the Hoover app. Thank you. Our final speaker today is Dr. David Laborde de Bouquet, Senior Research Fellow in the Markets, Trade and Institutions Division of IFPRI, and their theme leader on macroeconomics and trade. Recently, he has been focusing on costing the roadmap to achieve SDG 2. David, you're welcome to the panel. Please begin.
Yes, thank you everyone for being here, and thanks for the invitation. I'm going to organize my little talk around two phases. One, I will come with the more generic drivers, and after I will take a few examples of specific value chain and what it means for some exporters. So, of course, for the future, it has been already discussed by our other participants. We are not sure to which extent the health crisis is behind us. In many continents, it's still with us. We are not sure when we will get a vaccine and how widespread it can be disseminated because it will have an impact on the movement of people. So there is still a number of unknown that will impact the future of the economy growth and economic recovery. Still, what is sure is that we have this fall of economic activity that has been associated with a fall of income and a fall of demand on a number of markets. As it had been discussed, not all markets are impacted in the same way. As economists, we know that the demand of different products are subjected to different income elasticity. So the sensitivity about how the demand for some product is related to a change in income, and different products have different sensitivity. And when I will go back to, when I go to my example, I will show a few examples about how different export products in particular for smallholders or medium farms involved in international value chain are actually exposed differently to this sensitivity. The type of the recovery we are going to see, people have already said it will not be a V, maybe a U, maybe a L, maybe a W. That will depend, of course, on the health crisis, but just learning from the past, different regions of the world are going to recover at different speed because their economic tissue is impacted differently by the type of cost, depending about what were the initial trend in terms of growth, how they have managed to deploy social protection, how they have managed to protect their SMEs. So what we are calling the hysteresis of the crisis will vary. And this is something we have seen very clearly just with the last economic crisis with the Great Recession of 2008. Some markets have recovered very quickly. Some markets have more or less never recovered, actually like Europe, especially Southern Europe. So here the regional dimension of where your markets is going to be quite important, and Maximo has already discussed this. So creating new opportunities, but just making sure that potentially in the world there is still have a consumer, maybe not where I used to find it. And that will be quite important in terms of adaptation. And even if you still sell the same quantity, you can get lower price also. Is that what it's important when we think about markets? The fall of demand, especially for agricultural products, may mainly be absorbed by a decline of prices. So for smallholders, and also depending how you contracts have been negotiated and expressed, that can be quite important. We don't want them to be trapped between input prices that may not fall as quickly as output prices. In terms of shift in demand, not so much in terms of volume, but really in terms of pattern, we have this fact that, yes, eating away, either drinking coffee at the office, in a coffee shop next door, or just going to a restaurant has been impacted and will continue to be impacted until the recovery in terms of movement of people has been addressed. But also what we have seen, including in a number of developing countries, the perception of various food products have changed during this crisis, meaning that fresh products are considered more risky than non-fresh products. So people have moved from fresh fish to dry fish in a number of Southeast Asia countries and so on. So how long this change in terms of preferences is going to remain will be very important to shape the future demand. So thinking about demand, not just about the volume and the income effect, but also how the crisis has impacted consumer behavior, that's going to have actually an impact. Now, the role of trade, I'm a trade economist, so I'm following this with attention, and the design of the value chain at the regional level, global level, or a national level may change due to the crisis. I will not say that we are sure that things are going to change drastically. You know, the world in the last 100 years have been through very big crises, or I would say transformational changes, some positive, some negative, but markets have still continued to operate in a very similar ways. So at the end, there is some trade-off between diversification and specialization, and the probability of some risk will be part of this computation, and also the trade-off between efficiency and redundancies. Or you would want to streamline your value chain and avoid too many transaction costs, or you want to have a number of doubling or tripling of some elements in your value chain that are actually additional cost on a yearly basis. But when a crisis happens, you are pretty happy to have them. In terms of key elements for trade, it's transportation cost. And here what we have seen during the crisis is also that for both local transportation, especially in developing countries, it's very difficult to differentiate transportation of people and transportation in goods. So if you are blocking some trucks, if you are blocking some buses, actually you are disrupting a lot of the logistic of the food value chain. And similarly for international trade, if you don't have passengers in most of the planes, you cannot have the same cost effectiveness to carry the goods that were in the cargo bay. So how it's going to get recovered, that's going to be another part of the equation, because if transportation costs, in particular international transportation costs through planes, will remain high, some specific value chain are going to be heavily impacted. So it means that or they will have to shift to another type of transportation, including by sea or by train, meaning that it will take more time, so costs also will be impacted, but also it means that cold storage and refrigerated transportation method will need to be used if we continue to trade in these high value products. So there will have some adjustment to be done. It has already been raised by a previous speaker. Adjustment as a cost in the short term. After, in the long term, we'll see if we can adjust. But really, I think that this question about how much the food trade rely on air transportation is going to be a key topic even after this COVID-19 crisis, because we know that currently we are not pricing the carbon properly in more or less anywhere, but in particular in air transportation, that it's not clear that we are going to be able to do the same technical innovation in air transportation that we have done in sea transportation, because the cost of sea transportation has been incredibly reduced over the last century with bigger ship, with containerization and so on. What is the technological equivalence in air transportation is not clear. So there is a serious concern that if we want to really mitigate climate change, if we want to price carbon, relying on air transportation for fresh product may not be a long-term strategy. And so this is where some of the long value chain, like exporting green beans from Kenya to London, may need to be rethink or adjusted to something that is currently a clear disruption, but we'll have in the medium term when the airline companies will need to recover impact on the cost structure, but of course on the long run through the climate change policy. Last but not least, about these different, I would say, drivers that we are seeing now and that can also impact the future of the investment is on one end this digital fracture, meaning that we have seen that value chain and smallholders that are part of the digitalization have been much more resilient than countries or people that are not part of this, either by receiving facilities of payment or just information about where they can deliver and when. And so that's going to be a need to be addressed. Last but not least, we trade over distance. We want to trade fast. So the time we take to transport things as a cost, especially for perishable product. And as soon as we have delay, what we see that we need to have infrastructure to absorb any delay, both in terms of storage. Here, Maximo also has discussed different implications around storage, but I will say cold storage, for example, in particular, is something that will need to be focused on for high value product. And of course, having some, and hopefully that will be just the development path, more processing facilities in developing countries, in Africa, just to make sure that if you cannot sell your mango in the next 2 months, or just next week, sorry, 2 months is already too late, but and expedited them to Europe, you have alternative and processing centers around in order to not waste your food production. So, because time is running, I just want to give some evidence. As I've said, and just
David,
1 minute. Yes?
David, I think we'll maybe put the evidence into the dossier of documents so people can read it later, if that's okay with you. Thank you very much.
To say some sectors like cocoa, cotton, some fruits are already impacted because they are very sensitive to income. Some like tea and coffee are less impacted by income, but still, and it's where this change in behavior, as has been discussed, is quite important to follow. Thank you.
Thank you very much indeed. And you've made some very excellent references to some of the things that the other people have said. And so it's tying some of the things together. It just shows how agricultural economics is connecting all these thoughts, innovation included. Thank you very much. We will go on for about another 20 minutes, finishing around 1/4 the hour, whichever hour is your hour. And now we'll go into some questions. And first to Maximo, a question, please. What can investors do, Maximo, to reduce the negative impact of a potential second lockdown in smallholder agribusinesses?
Okay, so I think that the only thing we can do, I hope you are seeing me. Okay, so the only thing we should do is to be careful in increasing the health protocols right now. Why? As it was mentioned before, the agricultural value chains are pretty complex, and especially the part of what refers to the packaging and to the processing, which applies to smallholders, medium and large, are designed in a very labor-intensive way, and that needs to be restructured if we want to cope with this potential risk. As I mentioned before, I don't think there will be lockdowns by decree. I think there will be lockdowns because of the intensity of health. Now, another example is what is happening, and I mentioned before, and I will be very brief in the case of the wholesale and retail markets. And this is very important in developing countries where markets are open and they will normally have a huge concentration of people. If you just overlay the information of the mobility of people with the level of positive cases, the correlation is enormous. And that means that many of the people working in these markets are already infected with COVID-19. So that needs to be controlled, and governments have to play a role there. So I think governments need to be very active, and they need to take this as an opportunity to restructure the way we operate. And one good option to do this, linked to what David said, is the e-commerce. And the smallholders can do e-commerce. And I think we need to find a way to promote that more. Many countries in Africa already use mobile money or e-money. To promote that more so that we reduce the physical contact in markets and we make it work better. So I think, again, let's take the opportunities. Let's figure what we can do. The Broadband Commission is trying to increase accessibility to internet. There are very good options right now in terms of cheap 2G and 3G through the new satellite operations. And we need to take advantage of that so that it's inclusive and not creates a bigger divide. That's the most important thing, and that's where governments have to play a strong role to make it inclusive. And that's where for smallholders would matter. Thank you.
Thank you very much indeed. I'd like to ask Steve Knocker a question. Steve, we heard from Julian earlier about some of the underlying social and power constraints in financial systems, particularly in the behavior of people working in the financial sector. Do you think that the C-19 crisis might shock people and the institutions may work in a different way to become more feminist, to be more participatory, to get closer and to have more proximity to the source of information?
Yes, I mean, this is one of the million-dollar questions, and it sort of, even though I didn't get a chance towards the end of my remarks to sort of go into detail around this, you know, one of my big concerns is what the crisis does to the availability of financing to the developing markets. I mean, I think it'll be a concern in the developed world as well. We can think back 12 years ago to the financial crisis. You know, Europe is still living with the hangover of all the zombie banks that resulted from that crisis. And there will be a significant impact around the providers of financing in Africa, Latin America, Asia. And I think that, you know, some of the issues where we've made great strides in recent years around issues like inclusion, where we have a real focus on, you know, we measure the impact, and we give bonus points, you know, to be crass about it, for inclusion, for attention to, you know, the UN principles, climate, et cetera. When there are fewer providers, when access is frankly just much more difficult, you know, it's not difficult to imagine that some of these, you know, really paramount issues around human development, inclusion, could play a lesser role. I mean, we are working very, very hard to put it at the forefront of everything that we're doing. Our, you know, sort of brethren and sisters in the social lending community that are on their feet are working similarly. But I think it's an issue that has always been with us. We've made progress. I think we rightfully should all be concerned that there may be some backsliding, and, you know, but I think keeping it in front of us is what we need to do now, and then we need to make sure that we're doing what we can to provide access to financing first and foremost, and not losing sight of some of those important principles, you know, that have been mainstay for us.
Thank you very much. Without wanting to put you under any particular spotlight, but maybe you could illustrate from Root Capital, but also talk about what other financiers may be needing to do or could do. What is Root planning in terms of financing, not just technical assistance, to help support firms with recovery?
Sure.
What should others be doing?
And I'll keep my comments brief on this. What we're doing is as much as possible keeping a business as usual mindset. We have about 300 clients around the world. We are committed to supporting each and every one of them to the extent that our capital permits. To the extent that it doesn't, meaning we need more flexible capital, and we need donations. We're working with a whole host of other NGOs, foundations, and a bunch of governments, US and European at the moment, to secure that corpus, that money to inject. A lot of it's for health and safety issues, first and foremost, but then also, you know, focusing in on, well, how do we need to sustain, how do we bolster our capital so that we can continue to lend into what is a more risky environment. And then, you know, what we're getting into now, which is probably 6 to 12 months further out, is understanding where are the providers of capital expenditure. You know, that we heard about the opportunity with a tractor company. We see that in all markets. We don't know today who will be providing the funding for those sorts of things, but the community, the ecosystem, however you want to describe it, you know, we're taking it as a responsibility to support our clients, to work with them, and we may not be able to do everything because we can't do everything today, but to you know, sort of own identification of potential solutions. Some near term, some which will be more longer term, a lot of which will be aspirational. But I think the support of a number of government and other large philanthropic foundations will remain to be key partners of ours.
Thank you. Thanks very much.
Sure.
Now I'll turn to Gillian. There has been a lot of interest in your statement. Thank you very much indeed. Obviously, it'd be good to hear your views on whether the C-19 crisis will shock the way financial institutions work to become more feminist or participatory. I'd also like to know a little bit more about what you think in regard to how Steve talked about the importance of resilience. And you mentioned power and how power is allocated in the world, and whether or not you think unless power is solved, then people can't be more resilient and the powerless will continue to be vulnerable. Thank you for your thoughts.
Thank you. Thank you, Julian. So let me first thank the folks who are on this conversation, because in the preparation for agreeing to be on the panel, I was very concerned that what we were doing is registering a moment in a movement. Because your question about power and the efforts to redistribute power and to right-size power to get a system to get a world that actually reflects the people who live in the world. Because late-stage capitalism is actually a world that recognizes a small fraction of the people who live in it. And so, to some extent, what we're doing is we're going back to source. We're going back to what some might argue is our own humanity. And I've been in lots of conversations since the COVID pandemic to try to understand what led to the kind of dysfunction that we're seeing in the US and in the UK. And I think that there might be some clues in the societies where individualism is privileged over everything else appear to be the societies where there hasn't been a social compact that has allowed for an effective response to COVID. And therefore, the places where the response to COVID has not been salutary are the places that we used to call the developed world, the places that we look to for solutions and expertise and so on. And in one of the very first pieces that I wrote, which is in the dossier, I said that, in fact, what we ought to be doing, not only with our public health crisis and public health response, is widening the solution space. If we use a different search algorithm, we actually find expertise, depth of knowledge, superior understanding in what might be surprising places for people who are sitting in New York and London. So the solution to power and adopting a feminist analysis is very twinned, unsurprisingly, to my innovation analysis, because I sort of take my feminism wherever I go. And so my understanding of innovation and that call for searching for diverse sources of knowledge and understanding that there are also different types of capital is essentially an intersectional feminist analysis. Because the relational capital, the social capital, the cultural capital that is actually required to bring about financial return and societal impact is essentially applying a feminist analysis to investment. So thanks for the opportunity to give that further explanation.
Thank you. Thank you very much indeed. We could go on for a lot longer, and maybe we'll have an opportunity on another occasion. Thank you. David, there's a question for you from the participants. Is the change from fresh to processed foods from the supply side going to translate into more national and regional trade versus international trade? What do you think?
So actually, when we move from a less fresh product to more processed product, it's more opportunity to international trade, and because you can carry goods over a longer distance and it takes more time. Now we are going to see clearly this discussion and debate about local value chain versus global value chain, and what it means in terms of food security and food sovereignty and so on. So it's going to be a clear debate. Now I think we need to be really based on evidence. And the evidence today that some of the very globalized, mechanized value chain have continued to operate, when in some case the local value chain from bringing your milk from your farm to the dairy processing center that is closed is not operating. So we may have many more difficulties to drive or carry goods over 100 kilometers than 5,000 kilometers by ship. So really depends of which product we are talking about, and an overgeneralization that thinking that local is more secure than international is just an illusion. Just think also about the locust crisis. If your country is currently facing this type of shock, you are pretty happy to trade with your partners, and your partners can be next door or farther away. So I really think that the resilience of the food system and the different value chain are going to be about the diversity, and going all local will be as ridiculous as going all global, both from a cost perspective, sustainability perspective, but also risk management. Also, I think that we are going to have to be careful about people moving from local to domestic or national. You know, if you are in Canada, if you are in Vancouver, Mexico is still closer than Quebec. So, you know, we don't want to see a kind of murky protectionism kicking in. Now there is a lot of potential of regional trade that have not been fully untapped. And it's where also, in the case of Africa, what we see that processed food is really a booming sector for the continent. There is a lot of opportunities, and also in terms of standard, and also the point made by Maximo, it's actually easier when you are in a many African country to export even today to another African countries, so I would say formally or informally, yeah? But at least the consumer perception of your product is better, and the requirement in terms of standard is a bit lower, or at least more familiar to what you are used to do. So that's where actually we can see that more processed food may mean more regional trade to benefit from a similar taste of consumers, similar norms and standards, but it's where also regional organization and regional internalization have to operate properly to get to the standardization.
Thank you very much. It's clearly not a simple and straightforward and easy complex problem to solve, is it? There's a lot of complexity involved. Thank you. There's a lot of variation. For the last few moments, I'd like to return to Gillian, please. Gillian, you mentioned in your statement at the beginning that knowledge capital is important for investors. I'd like to give you the opportunity to talk a little bit more about that. And in particular, could you say, please, if it's okay, what you think needs to change to make knowledge capital work better for investors?
Okay, so thanks again, Julian. If I may, I will illustrate with an example from my own work that is outside of agriculture, but I think makes the point very specifically. So for 10 years, I worked in the telecoms industry in the UK. So my very first job was as a mergers and acquisitions analyst with British Telecom. And then in the early 2000s, the government of South Africa, so the new democratic government of South Africa, was thinking about privatizing Telecom South Africa. And so all of the investment banks were basically very interested in getting that mandate. And so I was recruited by JP Morgan Chase to help JP Morgan win the global mandate. And I want to believe that that was the case because I had by then left my job, and I was doing a PhD at University of Sussex, concentrating on the telecommunications, telecoms, technology strategies of African telecoms companies. So at that time, I probably knew more about the telecom industry than many other people in sub-Saharan Africa, and had spent a lot of time gathering that subject area expertise. And so an investment bank wanting to win a mandate, which is essentially a financial mandate to privatize some assets, understood that to equip itself for doing so, we needed to have subject area expertise. And so I go back to now flipping to the agriculture example. Growing sustainable farmers, that example that I mentioned right at the start, has a bench of agronomists and development practitioners and so on. And if I were assessing that using a purely technical lens, I would say, well, why do they have all of these people on the list of persons who are relevant? Because I would not be understanding that that depth of knowledge capital from those agronomists, from the community leaders in KwaZulu-Natal, is as important as what you're going to read in the codified knowledge that would be available on the market. I hope that that helps to paint a picture of the types of knowledge on the one hand, and the extent to which it's important, as one of my favorite scholars, Dorothy Leonard Barton, speaks about T-skills, where you have a depth of subject area knowledge, and then you have the ability to cut across different functional domains as being essential. And I think that finance houses do it, certainly with structured project financing. You would never do a large transaction without having subject area specialists. And so I think impact investors in their impact strategies or in their investment strategies, the investment theses, the folks that they have on their bench needs to include subject area specialists at depth. And we have had excellent examples of the kind of subject area specialists that come from CASA, from IFPRI, from FAO, and also closer to the source, so that these types of knowledge are then combined and deployed. And that is seen as something that has to be invested in. I hope that answers the question, Julian.
Thank you very much. And you've left it on a good point, which is making those changes will cost money, but there is a return for those changes. Thank you very much indeed. Well, that brings us to the end of the platform today and to the end of the series, sadly. On behalf of the participants, a big virtual round of applause to all the speakers for sharing their expertise and experience today. And on behalf of the organizers, well done to the participants for your excellent contributions. I hope you found it very useful. Before you go, you might like to know that we will be circulating a digest video of the whole series in the coming weeks. And please sign up for updates from the CASA program. We will send an email about how you can do that. If you are an investor or an organization supporting investors and you have ideas about how the CASA program can support you, please share your ideas on the Hoover platform in the section, What CASA Can Do to Support Investors. Finally, thank you to DFID as funders and to the team in the background at CAVI who have been organizing this. They've done so much of the heavy lifting behind the scenes to make this series possible for the program. Thank you very much, everybody.